fourth one now. It is accounting entity or business entity principle. This is a principle because of which I have been, drawing the two faces since day one in accountancy, right? One is the smiling face, other is with no reactions at all, right? Yes, please identify these two faces. The smiling face is
Us.
owner, okay, and the second face,
Business.
no reactions at all, right? तो एक है लिविंग पर्सन, एक है आर्टिफिशियल पर्सन. लिविंग पर्सन होगा तो रिएक्शन देगा ना, तो स्माइल करेगा बंदा. आर्टिफिशियल पर्सन है तो क्या स्माइल करनी है, वो नहीं करेगा, ठीक है? सो business and owner, right from day one I have been telling you, like, these are two separate entities. Whenever we do the accounting, okay, whenever we have a record of the transactions in books of accounts, we simply think of the business, not of the owner. So in the books of accounts, we simply are going to have a record of business transactions only, not owner's personal transactions. Okay, so this is the statement over here. Business is considered as a separate entity and distinct from its owner or owners. The proprietor of the business is considered as a creditor to the extent of his capital. We know this. Okay, capital introduced by the owner is one of the liability, that is internal liability for the business entity. And for business entity, the owner is also a creditor, a liability. And his capital is considered as a liability to the firm, similar to the borrowing from outsiders. This is, we have discussed n number of times now. Separate books of accounts is kept and maintained for recording the business transactions. We are never going to entertain any personal transactions of owner. Okay, if owner has been spending some money out of his personal bank account, out of his pocket, so business has nothing to do with that. But yes, if owner spends some money for his personal reasons out of the business money, that will be recorded. That is taken as drawings. We know that, right? Okay, so transactions are to be recorded from the point of view of the business entity, not from the owner's point of view. Please remember this. This is the most important part, though, like, we have been discussing since day one. Okay, but still, please remember, whenever we have a record of the transactions in the books of accounts, it is always from the viewpoint of business, not from the owners. अभी क्या मतलब, lifetime जब तक आप accounts करोगे तब तक ये याद रखना. Some more things are there related to this concept. The personal transactions of owner are kept separate. Okay, we are not going to have the mix of the two things, like the owner's personal transactions as well as business transactions. No, whichever personal transactions are there of the owner, they will be treated as drawings. Okay, example of a house or a car or investment and personal income or expenditure of the proprietor should be kept separate from the books of accounts of the business entity. And if cash of goods is withdrawn by the proprietor, it is taken as his drawings, and firm may charge interest on it. Similarly, if the proprietor has some other business entity, okay, its accounts should be kept separately. Okay, it doesn't matter, like, if just one owner is there managing two different entities, so दोनों का अलग ही set of books of accounts बनेगा. It can't be just one. Okay, and yes, if this assumption of separate business entity is not followed, तो क्या होगा? In that case, we will not be able to arrive at the correct net profit of the business entity, will not be able to have a proper financial position of the business entity. Business and owner are to be considered as separate entity from the accounting point of view, right? And this assumption is applied to all other forms of organizations, right? If you talk about the sole proprietor, you talk about the partnership or a company, always, any organization will be recording the transactions from their point of view, not from the owner's point of view. Second is, for the day, like money measurement principle. Any idea about this? Anyone? This is something we have discussed earlier in case of, like the process.
Sir, we write only those things in our books of account. Those can be measured in terms of money, who have some money value, monetary value.
That's very correct. Only those transactions are recorded in the books of accounts which can be measured in terms of money. Or in other words, we say that the transactions of the events which are not measurable in terms of money, we do not record such things in the books of accounts. Example of the transactions that are recorded, you can talk about the purchase and the sale of goods, you talk about the purchase of an asset or payment of salary or any income, etc. Because these are all measurable in terms of money, these are to be recorded in the books of accounts. And the transactions which are of qualitative nature or which cannot be measured in terms of money are not to be recorded in the books of accounts. The examples, I'm sure you remember that the appointment of a manager or a harmonious relation between the employer and the employee and the team of the dedicated employees, right? We have discussed these things earlier also. Like though like these all events, okay, are going to have a huge impact on the working of the company or the business entity, huge impact on the profitability position. But because these all transactions or the events cannot be measured in terms of money, we never record such things in the books of account. Money measurement principle, also requires that recording the transactions in monetary form, not in physical units. Okay, we will have an example to understand this. A firm has a building consisting of 6 rooms. Afterwards, building him, you talk about 10 computers, you talk about 40 chairs, you talk about 10 tables, you talk about the stock of meters of cloth, right? अब यहाँ पर क्या कि different products are there, different things are there, different assets are there. Every asset will have its own unit of measurement. So, can these be recorded like this in the books of accounts? अगर मैं accountant को बोलूँगा भैया लिख यार मेरे पास 6 बिल्डिंग and 10 कंप्यूटर हैं सब लिखो, तो accountant ने हाथ जोड़ना है, sir sorry मैंने नहीं लिखना. I'll ask him why so, like मेरे पास इतना सब कुछ है तो लिखो ना. He will simply say that कि मैं सर चीजों में I don't believe, आपके पास कितनी चीजें हैं मुझे मतलब नहीं है. Get me the value of those things. If I am able to give him the value की building का value इतना है, computers का value इतना होगा, तो yes. These all things are not to be recorded in the physical units form. We need to have a common unit of measurement, and that is rupees, right? So, as these assets are in distinct unit, so cannot be added together to exhibit a meaningful information. And if these values, if these assets are measured in terms of money, yes, then they can be recorded easily into the books of accounts. Money measurement principle has its own limitations. One is the qualitative aspects. These are ignored. We know very well. But apart from that, this is about the price level changes. The value of the money does not remain same over a period of time due to the change in the price level. For this, like I already have given an example earlier, like the notebook that you used to purchase in class 9, okay, the same notebook you are going to purchase in class 11, the price will differ. Okay, it's not like that the organization is increasing or any of the stationery vendor is increasing its profits. No, but point is because of the price level changes. Value of money is very much less today than what it was 5 years before, and also the assets purchased. These are all the limitations, right? Are purchased at different point of time, but what we do is we just club together and write it at just one value, and that too at its historical cost. What are the amount that we have actually paid for to acquire the asset? That is the amount that we keep on recording in the books of accounts, irrespective of the market price. And the accounting data, because we just follow all these things, so the accounting data does not reflect a true and fair view about the state of affairs of the business entity in the balance sheet. When you talk about the assets and all, yes, you will never be able to get a true picture from the balance sheet, right? These are all the limitations of money measurement principle. Next is accounting period principle. Yes, any idea which accounting period, the financial year is that is followed by all the business entities?
Sir, it is from 1st of April to 31st March of the next year.
Yes, 1st of April to 31st of March. This is the accounting year we follow, April to March. We have this particular period of time, okay? But why do we need to have this? Have you ever thought of? Okay, the reason we'll learn this over here. The point is, as per going concern principle, we know that the life of the business is going to be long. We have learned that in the first concept, right? We just assume that the business is going to continue its operations for a long period of time. It is not going to be liquidated in the near future, right? That is what we know. But whosoever the users are there, okay, the users of the accounting information, Can they wait for the financial statements till the time of the liquidation? The answer is no. Okay, because actual result of the business तो तभी पता चलेगा ना जब firm बंद होगा, right? When the business is getting winded up, the firm is getting dissolved, or any company is getting liquidated, right? Then only the actual result of the business entity can be known. Okay, actual what are the assets are there? They are sellable in the market at the market value, right? Stock is sold in the market at its realizable value. Okay, so point is, because there is a difference between the accounting policy and like the actual picture, users cannot wait for the firm to get liquidated, right? And for that purpose, they need to have the information on a regular basis, right? You have various people, various users with their various objectives. We talk about management, we talk about the bankers, we talk about the financial institutions, we talk about the creditors. Each and every user have their own objective, so that they may take the appropriate decisions on timely basis. Okay, you have like management, their objective, bankers and their objective, you have government and their objective. Okay, to just fulfill the need of their objective. Okay, what happens? All these people, all the users, okay, they need to have the information on regular basis, and because of this, all the business houses should prepare their financial statements to know the profitability and the financial position on periodic basis, and that period has been taken generally a year, right? Also, the interval of the time is called the accounting period. Yes, it is also required by the Companies Act 2013. Income Tax Act also requires that the financial statements should be prepared by every business entity by 31st of March, so that accordingly they can collect the taxes, and the accounting year that is generally followed is 1st April to 31st of March. One more thing is there. The companies for whose shares are listed on stock exchange, companies whose shares are listed on stock exchange, they are required to publish their accounts on quarterly basis. You talk about the first quarter. First quarter is from 1st of April to 30th of June, right? So every company, okay, whose shares are listed, they are supposed to prepare their the reports on quarterly basis. They need to come up with the financial statements. Is quarter ka kya result hai? Are we into the profits or the losses? What is the financial position? Everything has to be published by them. Okay, so quarterly reports are prepared by them, so that the users can get the information at regular interval of time and the quarterly basis now from company's point of view. But still, the sole proprietors and partnership firms, like, they are not given such kind of information. This concept, full disclosure, as I was just about to start, this is a concept which tells us we need to disclose the information which is required by the various end users of accounting information. The full disclosure principle requires that the financial statements make complete, adequate, and fair disclosure of all information which is relevant and significant to the users of accounting service. And to repeat the users over here, we all know that like investors and lenders and creditors, and these are all the various users, right? So the financial statement should have the complete, adequate, and fair information, okay, which is relevant and significant to the users of accounting service. The principle of full disclosure requires that all the material facts which help in the appraisal of the operating and the financial performance of an organization must be disclosed in the financial statements and in footnotes. It is very much required. Material facts, all information which has some significant importance to the various users, that needs to be disclosed in financial statements, and which do help the users to conclude something about the operating and the financial performance of the company. The users can analyze and interpret the financial statements to suit their objectives. We all know that various users are there, so they have their objectives also. In chapter 1, we are already done with. Accordingly, they will be analyzing and interpreting the results. To ensure the proper disclosure, Companies Act 2013 has provided the following. Like, what all information, like a kind of a compulsion, mandatory for the companies to disclose these reports, these statements in a proper format and all should be there in the annual report, right? Number one is the format of financial statements, right? When you talk about the financial statements, it basically includes the statement of P&L and balance sheet also. Next is about the cash flow statement. These days now, it has been some years, okay, cash flow statement has also been compulsion for the companies to present it in their annual report. Next is segment reporting. It is possible that when one company has various segments, okay, maybe dealing in the various products. So which are the various departments are there, which are the various segments are there. The report of each and every segment has to be presented over here. That is required as per Accounting Standard 17. Then is note on accounting policies. Which are the accounting policies we are following? A note related to that has to be presented in annual report. After that, it is report by board of directors. Okay, also the board of directors are there. They need to present their report as well, in which directors' responsibility statement is required. Report on corporate governance, management discussion and analysis. These all reports are required in annual report. Apart from this, auditor's report is also required. Auditor's report is required, because then only the public will have some faith in the company, the trust in the company. Okay, the company is getting its books audited. They are checked by so-and-so auditors. CAs are there. So with the help of them, the books are audited, and they can just rely upon the information. They can have that faith key. Whatever the statements are prepared, they are showing the true and fair financial position as well as the operating performance of the company or the business entity. This disclosure, like all these reports and the financial statements, the cash flow statement, this disclosure ensures that the financial statements give a true and fair view of the profitability position as well as the financial performance of the company to its various end users. This plays a big role, right? Auditor's report. Okay, this is what is all about the full disclosure concept. After that, we have the next one as Materiality Principle, very much related to the previous one, full disclosure ke saath hi. In full disclosure, we just had one line over there, like all the material facts which are significant, which are important to the various end users. The materiality is in continuation to the full disclosure, right? It also asks us the same thing, but full disclosure mein, we are showing the information with the help of the various statements and the reports, right? But over here, we need to understand what is a material fact. Okay, so the principle of materiality requires that accounting of material facts in the books of accounts, and accountants need not present the facts which are immaterial while determining the income of the enterprise. So we need to decide that like which is a material fact and which is immaterial fact. Material fact kisko bolenge? The information, right? An item should be regarded as material if there is a reason to believe that the knowledge of such an information would influence the decision of the informed investor. Whosoever the investors are there, whosoever the stakeholders are there, for them, if any such information is there which will influence the decision, then that becomes my material information. But we know like various users are there, and they have their various objectives, correct? So it may happen that the information which is material to one may not be material to another. Okay, that is also possible. कि मेरे लिए जो important information है दूसरे के लिए नहीं भी हो सकता है, that's fine. So keeping in mind the various users, the companies will be preparing the same set of books of accounts, and whosoever the users are there, they will be taking the decisions accordingly. Now the materiality again, the importance of an item depends on its nature as well as the amount involved. If any small amount is involved in a particular transaction, that the information like maybe in some hundreds only, right? So it hardly matters from a company point of view, with the company which is dealing in crores and crores of rupees, right? So amount involved and the nature of the item are the two factors which will help you to decide the information is material or immaterial. We have some examples to understand the material facts. The first one is interesting actually. Money spent on extension of size of the shop. You talk about sole proprietor, you talk about partnership, you talk about the companies हैं तो already one building था, like they are getting the second building also constructed, okay, in the same premises. So this may happen that, okay, this is just an indication that either company or the firm is trying to expand their business. नहीं तो फिर एक्स्ट्रा शॉप लेने की जरूरत क्या है, एक्स्ट्रा बिल्डिंग क्रिएट करने को कंस्ट्रक्ट करने की जरूरत क्या है, राइट? सो दीज आर द रीजंस व्हाई the reason behind this is that the company or the firm is thinking of expanding its business. Now, when you are thinking of expanding the business, that means there is a good probability or a chance of increasing the earning capacity of the business. So tell me now whether this is material fact or immaterial fact. It has to be brought to the notice of the various investors or the various stakeholders, whosoever it is, like debtors and creditors या फिर money lenders हैं, like you can talk about the bank or any other financial institution. When they just see that yes, there is an expansion in the building and all, so it will help them to grant the loan to that company as well. Okay, next is a variation in the value of the closing stock is not significant, but a variation in the cash balance of the same amount, right, is a significant and material fact. Nature of the item, right? Stock, ठीक है, जो भी प्लस माइनस होगा तो we can go and verify it. But point is about cash balance. If there's a difference in the cash, that becomes my material fact because it has to be brought to the notice of the accountant. Okay, कि 200 का mistake, 200 is a minor amount actually, but still 200 rupees गए कहाँ? अगर पैसा आया है तो गया कहाँ? अगर पैसा खर्च किया है तो कहाँ खर्च किया है? That should be known to us. Why there is a difference in the cash book and the cash box? There should not be any difference. So that becomes a material information as compared to the variation in the closing stock of the same amount. The third one is also important, keeping in mind those one marker questions. Okay, when you talk about the stock of pencils and erasers, that is the stock of stationery. Okay, we never show that as an asset. Okay, because we know it's an expense, so it has to be treated as a revenue expenditure and has to be debited to profit and loss account. Because even if the stock is lying with us or stationery, some pens and erasers and ink pots are there, so that's a minor amount. Okay, there is no any stakeholder who will take that good interest in the stock of the stationery. So that's totally immaterial information. So purchase of stationery, the amount spent on stationery should be treated as a revenue expenditure as per materiality concept, right? So these are the examples which help me to make you understand about the material information, the material facts. That's all for the things I think. Yes, next is like this is one of my favorite principles, the conservatism, prudence. Okay, this is the principle, okay, which helps the business or the business people also, right, to be on the safer side, to play a very, very safe game in the business. The reason is very clear. This principle states that like if the business entity anticipates a loss हुआ नहीं है लेकिन लगता है कि फ्यूचर में कुछ लॉस होने वाला है, so what is to be done? So this principle asks the business entity for the anticipated losses, make a provision, keep some amount aside so that in future if that loss occurs, like if that loss takes place in the business, so you are well prepared mentally as well as financially, so you can face off those losses and so that your normal routine of business is not getting disturbed, right? But against this, if you are anticipating some profit agar anticipated hai, so that should not be recorded in the books of accounts unless and until it is realized, right? Two things are there: anticipated loss, anticipated profit. Anticipated loss, yes, you should consider it, make a provision for the losses, anticipated losses. But if you anticipate profit, no need to consider anything. Unless and until it is realized, you are not supposed to record that in the books of accounts. Let us see this. And why are we not supposed to do that? Let us see. And a very interesting fact is there behind this. According to principle of conservatism, if the management anticipate loss, provision should be made. But if it anticipates profit, it should not be recorded in the books of accounts unless and until it is realized. जब तक पैसे मिले नहीं, जब तक हमने उस प्रॉफिट को रियलाइज नहीं किया, तब तक बुक्स में नहीं लिखना. But if you just anticipate a loss, कि फ्यूचर में कुछ लॉस हो सकता है, get yourself prepared mentally as well as financially, right? So make a provision for that. Now, the principle states that management should be conscious while ascertaining the income. Profits की बात करें ना कि profits को क्यों record नहीं करना? The management needs to be conscious कि if you don't follow this principle, what will happen if you just anticipate the profit? Profit होगा मेरा, ये सोच के आपने books में record कर दिया, profit तो हुआ नहीं है. तो profit, if anticipated profits are recorded in the books of accounts, at the end of the year, your statement of P&L will show a good amount of profit. That's not realistic, right? वो actual profit तो नहीं है, but वो anticipated profits include करके है. So if you show the higher profits, what are the consequences now? Because you are showing a good profit, you will have to pay dividend to the shareholders. You will have to pay higher wages to the workers. Employees may demand for higher salaries and all. Maybe they are expecting some bonus. They are expecting some increments and incentives, right? Because the profit is shown higher. And actual profit to hua hi nahi hai. If you just keep on declaring the dividend to the shareholders, or that is declaration of dividend out of capital, because the profit is not has been realized. So that's a limitation. That's the consequences, like if you don't follow this principle for the incomes. So we should be very, very conscious as a management. We should be conscious for ascertaining the income. Income should be recorded in the books of accounts only when it is realized. But if you anticipate loss, yes, you should take a note of that. Okay. So this means overstated profit will be there, and it will mean the declaration of dividend out of capital. And dividend declaration out of capital is against the law. Okay, you are not supposed to. Whenever you want to declare a dividend as a company, it should be declared out of the profits. But if you declare out of capital, it is against the provision of the law. This principle is used in the following sentences. These are the various examples which will help you to recollect and recap the concept, that is principle of conservatism or prudence. The first one is a very common example which I keep on asking throughout the year in class 12 also. Okay, one of my favorite questions during the Viva for 1 markers, right? Key closing stock is valued at cost price or market price. I just stopped my question over here, right? Closing stock is valued at cost price or market price. The student answers the cost price or market price, but the actual answer is whichever is less. Okay, सोचो आपका जो cost price है वो 1 lakh है, market price 120 है. Market price 120 होने का मतलब 20,000 आपको profit होगा, लेकिन कब? When you are going to sell off that stock, realize the money, then only you'll be earning the profit, right? So इसीलिए out of the two, 1 lakh and 120, you need to consider just 1 lakh. But if say for example, market price is something less than the cost price, then what? Cost price is 1 lakh, market price is 90. तो 90 लिखेंगे books में. The reason is पता है ना कि loss होगा. अगर आज हम sale करेंगे 10,000 का loss होगा, तो let us be prepared with. तो cost price or market price, whichever is less, has to be considered for recording the value of closing stock. Similarly, like when you talk about creating a provision is created for doubtful debts. A provision is created for discount on debtors. I'm sure you remember this, right? For internal transactions, we have discussed these points. Creating a provision is just preparing ourselves for the future losses. Future में कुछ bad debts हो सकते हैं. Let us keep a provision for that. Future में जो good customers हैं, good debtors हैं, they may ask some discount. Create a provision or make a provision for the same. So making provisions for the future losses. That's an example, the best example for the concept of prudence. Apart from that, when you just keep on writing of the intangible assets like goodwill, patent, and trademark, this happens because of this concept, that is prudence. And next is again JLP, the joint life policy. This talks about the insurance policy. Say for example, if a partnership firm is there, 3 partners are there, A, B, and C. They have one insurance policy in their name, which is a joint life policy, right? One policy in the name of 3 people. That's possible actually, correct? Now, which value we are supposed to show in the books, in the balance sheet basically, of this policy? Do we need to show the actual amount of premium that we pay? Do we need to show the actual amount of the policy that we have taken? Or it is the surrender value? 3 options we have. So it is always the surrender value. The surrender value means the amount that we are going to get from the company as on that particular date, right? Which of the policy you have taken. Suppose you have taken the policy, and after 5 years, you do not want to continue the policy, you just want to surrender the policy to the company. मतलब कंपनी को आप इन्फॉर्म करते हो कि लाइक कंपनी को पॉलिसी को बंद करना है, what the amount is due to me, please pay me. Okay, so you just surrender the policy to the company, and the company will be paying you the value that is the value of the policy as on that particular day. So that is a surrender value. So which value? It is not the actual amount of premium paid. It is not the actual amount of policy, but it is always a surrender value which will be shown in the books of accounts in balance sheet, right? Yes, this is a conclusion part. The principle of conservatism requires that the profit should be recorded in the books of accounts when it is realized, but provision for loss should be made even if it is anticipated. This is what is the conclusion of this particular concept. This reflects a pessimistic attitude of the management while ascertaining the profit. However, the deliberate attempt of the management to underestimate the profit, then the true and the fair profit, will underestimate the value of the asset and will lead to generation of hidden profits. You are not supposed to do that. Okay, if you do it deliberately, जानबूझ के अगर ये create करोगे कि like which of the assets are there, उसको undervaluation करते हैं, stock को undervaluation करते हैं, so by doing so you will be creating a hidden profit, maybe in the form of the secret reserves and all. Okay, as per the rules, as per the law, you are not supposed to do that. But हाँ, as per the law, जितना जरूरी है उतना करो. That's absolutely fine.